Distinguished attendees, welcome to today's session on Financing a Sustainable Future, CFO Insights, organized by the UN Global Compact's Chief Financial Officers Task Force. I'm truly pleased to greet you and address sustainable financing, one of the most important aspects of our collective effort to achieve the Sustainable Development Goals. Around the world, entire economic sectors have been devastated by the COVID-19 pandemic. Businesses large and small are struggling. Increasingly, companies understand that their survival depends on how they respond to the cataclysm unleashed by the pandemic and by climate change. As UN Secretary General Antonio Guterres has said, to achieve lasting prosperity, we need to build a future that protects people and the planet. Investors and governments are recognizing that the transition to a sustainable, climate-safe future presents enormous openings for business. They see an estimated $12 trillion market in new SDG-aligned opportunities and the rise of the sustainable investment market, estimated $31 trillion in assets under management. Against this backdrop, CFOs have a critical role to play in reshaping the future of corporate finance and investment as a catalyst to help achieve the SDGs. Indeed, the UN has estimated that the world will need to spend between $3 trillion and $5 trillion annually to meet the SDGs by 2030. Nearly 2 years after it was launched, the CFO Task Force of the United Nations Global Compact continues to address the gap in necessary SDG financing. This network, which started with only a few members in 2019, now comprises 60 executives from leading companies. They are inspiring a new role for CFOs as the architects of long-term sustainable value creation. CFOs in the task force have committed to invest $500 billion towards the SDGs in the next 3 years. They also aim to link close to 50% of all corporate financing to sustainability performance. And this huge commitment to SDG investment and financing is only a starting point. The members of the task force plan to keep working together and inside their companies to promote further integration of the SDGs into corporate investment and finance. As part of its mission, the task force is proudly announcing the launch of a new initiative that will welcome many more CFOs into the fold. With access to more than half of Fortune 500 companies and several thousand other major firms worldwide, the task force has set a target of at least 1,000 members by the year 2023. I want to sincerely thank the CFO Task Force's co-chairs, Mr. Alberto De Paoli, Enel's CFO, and Mr. Scott Mather, PIMCO's CIO, and our team here at the Global Compact for helping us drive this global movement. I also want to thank all of you members of the task force. We are delighted to have you join us. You represent every continent and a wide range of sectors and industries. I hope today's discussion is truly insightful and productive. The UN Global Compact is uniquely positioned to support companies on their journey to a more sustainable and inclusive future. Let us now unleash the potential of corporate finance to realize the Sustainable Development Goals. Thank you.
With an estimated 3 to 5 trillion financing gap to meet the SDGs by 2030, the private sector and CFOs have a crucial role to play in our transition to a low-carbon and resilient future. The UN Global Compact CFO Task Force, launched in 2019, aims to address this financial gap.
For us as companies, again, we need to be able to manage a transition. So to have a transparent exchange with governments, but also their commitment to transition phase, letting us getting organized to respond to these new or evolving, I should say, not so new, but evolving requirements is incredibly important.
We're working to broaden the roles of CFOs so they become the architects of long-term value by engaging them at scale and creating a global CFO movement. We hope to develop a broad and sustainable finance market, integrating SDGs into corporate strategy and designing clear sustainability performance indicators.
We need to be collective and we need to have a collective movement if we want to make an impact. And in that sense, having one language, speaking about the same terminology is so important. The way we measure and we report our achievements cannot be different from company to company. We need to have a very strong level of comparability if we want to be true to ourselves.
Universal standards for setting, measuring and reporting sustainability targets can help combat greenwashing and ensure sustainability is embedded in every part of the financial markets ecosystem.
I always say what gets measured gets managed, right? So I think there really needs to be an alignment of interest. We need to set KPIs. That's actually vital. Only with that, I think we can really look at capacity building. We can look at knowledge sharing, and that can really help accelerate the process. So I think while that's not really in Singapore yet, for example, I think the CFO Task Force for the SDG is really a good example, of how these can be achieved, where you have collaboration amongst different parties.
There is also growing evidence that strong ESG credentials can boost a company's bottom line and access to capital.
Well, first of all, I would say it's not a contradiction. So I think you can perfectly meet the investors' wishes if you invest heavily into sustainability and transition your business model. And secondly, I think there's also a large chance for you as a company if you really do that transition. So move your strategy towards sustainability, because that opens new opportunities and, as I said in the beginning, also de-risks your company going forward.
Business models are shifting. From being aimed squarely at shareholders and short-term financial expectations, they are moving to far broader, more sustainable and equally profitable alternatives.
Companies have been a little bit more short-term oriented recently, but there's real reasons for everything we put in the sustainability index for ourselves, whether it's climate related, whether it's diversity related, because we really believe there's a medium and long-term value associated with that.
By joining the UN Global Compact CFO Task Force, CFOs have an opportunity to share and learn from their peers and to shape a sustainable future, not only for their companies, but for all of us.
Today, there's no doubt that if we look around ourselves, we see every day example of worsening of the environment and worsening of the condition in which the planet where we live is. And I think it's our duty, given what we do.
Marie, please unmute your mic.
Apologies. Welcome, everyone. It happens all the time. I'm really sorry about that. Good morning, good afternoon, good evening, everyone. We're delighted to be hosting this live session today. My name is Marie Moritz, and I have the pleasure to co-lead the UN Global Compact CFO Task Force for the SDGs, along with my colleague Jérôme and our fantastic team. You've just had the chance to hear from some of the CFOs in the task force in the second video, as part of the CFO Insights series that has been hosted by Maggie Lake, who will be moderating our panel today. So you'll also have the chance to meet Maggie in a minute. The CFO Task Force, we've heard, has started only with a few members, including Enel and PIMCO, who we'll hear about in a minute, in 2019, and has reached 60 members in the last months. And this is just the beginning. So I will let our two co-chairs tell you more about our collective achievements to date and our future ambitions. It is now my great pleasure to introduce Alberto De Paoli, CFO at Enel, and Scott Matter, CIO US, PIMCO. Thank you both for all your time, dedication, and commitment, and challenges as well. It makes a lot of difference to have you on board. Over to you. Thank you, Alberto and Scott.
Thank you, Marie. Thank you, and good morning, ladies and gentlemen. So it's a great honor to be here. So I think you have looked at how proud we are in working in what we have done. And so being here in this CFO Insights and the role of corporate investment and finance to achieve sustainable development goal is it's an honor for us. As we all know, the role of corporate investments and finance in relation on the global goals has never been more important than today. We have heard that so the financial gap was present before the pandemic, and we have to say sadly that the pandemic has set us back a little bit. So now we need more than ever to marshal an ever bigger collective will to recover time to address climate change that is not giving us time, and to reach the 2030 goals within the SDG goals within 2030. To this end, and to channel corporate investment and finance towards sustainability and SDG achievement, the active role of Chief Financial Officer of companies around the world will be critical. We all know that public sector funding cannot meet the SDG challenge alone, and that international cooperation, public-private partnership, sustainable finance improvement, and also an holistic approach and comprehensive approach are fundamental to target the global ambitions of Paris Agreement and the SDG achievement. Hereby, I can proudly say today that the UN Global Compact CFO Task Force already represent a reality in this common effort. For the past 20 years, we worked hard within our 60 CFOs composing the CFO Task Force and coming from different sectors, different countries, and different angles of the world. We have joined forces to be ready to announce today our commitments. So first, set a minimum of $500 billion that will be spent in SDG-aligned investment in the next 5 years. And second, we will run activities on sustainable financial markets to raise the weight of our sustainable finance on our common debt from 27% of today to 50% in 2025. And then this joint effort will grow even more because now the members of the task force are showcasing how beneficial is this path, this sustainable path, in terms of value creation. It's our belief that this will exponentially encourage other companies to follow, enabling a movement that might be able to unlock trillions of dollars annually, a total game changer. Enel is deeply committed to this agenda. Around $200 billion are the total investment fully aligned with SDG that we have committed to invest in the next 10 years to push the energy transition in a profitable and shared way. To support this strategy, Enel has been issuing sustainable linked instruments since 2019, when we issued the first ever SDG linked bond that now has become a mainstream instrument in the sustainable finance world. And now let me conclude by saying that now is the time for business to become sustainable business and for corporate to become sustainable corporate. Investment and finance that build healthy societies, healthy markets, and create shared and distributed values will inevitably drive to a new concept of capitalism, the so-called stakeholder capitalism, where sustainable companies will grow and prosper, creating value for all. This will be the very exciting journey. No other choice is available for companies wishing to grow and thrive in the future. And finally, let me strongly call CFOs everywhere to join us to write together the new business and financial history of this century. Thank you. And now let me virtually hand over to my colleague and friend, Scott. Scott, the floor is yours.
Thank you, Alberto. It's a great honor for me to be joining you all here today. And I also want to extend a special thank you to Sanda and the entire UN Global Compact team for organizing this very important event. As my friend and co-chair Alberto just said, today's topic is of absolute urgent importance. And while the sustainability agenda has advanced very rapidly in the past few years, it's often been the case that corporate finance and CFOs, chief financial officers, have been somewhat at the sideline or at the margin of this activity. And this is what really needs to change. Fortunately, the UN Global Compact has taken the strategic decision to expand its fantastic network of thousands of CEOs to include the chief financial officers, who we should remember are the custodians of well over $15 trillion in annual investment. So this recognizes the very important role that CFOs will have in driving forward with the achievement of the SDGs. In fact, many of the CFOs in our current task force, including Enel, have shown the way forward through massive investments in SDG aligned and sustainability aligned investments. And they've also innovated in new ways and really created a marketplace for things like sustainability linked bonds, which are growing very rapidly in the marketplace, especially this year. And speaking as a global investor with clients all over the world, I can relate to you that the demand for investments aligned with sustainability is really growing throughout our clients all over the world. And this very much mirrors the broader market trends. Bloomberg recently estimated that so-called sustainability aligned investments could reach over $50 trillion by 2025, up from a bit over 30 trillion last year. So that gives you some idea of the magnitude of demand and what's changing in the marketplace. And this is because more and more investors realize that sustainable investing is about building better, more resilient portfolios. It's good business. It's about reducing risk and taking advantage of the opportunities, while at the same time contributing to the broader global goals, including very important critical ones like climate change. So the CFOs in our task force can already be credited with many key developments, and we expect that their leadership, as well as the expanding network that we're going to create, will really create a new asset class, if you will. So we would estimate that in 5 years, the whole sustainability linked bond and loan market could be in the size of $10 to $20 trillion. So that really can demonstrate the sort of change that we see taking place in the market. And at PIMCO, we've been really at the forefront of encouraging these developments, working with issuers, both corporates and public issuers, to align their commitments with these financial instruments through issuance of things like SDG bonds and loans. And we're going to continue to be a very vocal advocate of that, and we're going to continue to be very large investors in that space. And we'd encourage anyone who's listening to this call, who's in a position to access these types of innovations and deploy them through their capital markets activities, to certainly reach out and talk to any of us that are part of the CFO Task Force. And we're happy to share our experiences and give you some thoughts on how you might join us in financing the SDGs through these tools. There's no question that the CFOs in our task force are real pioneers. They very much understand that we shouldn't let perfection be the enemy of the good, and to not shy away from innovation and experimentation. We really have to show some courage and boldness. There's a clear path forward. There's been these innovations and developments, and that's one of the goals of the task force, is to help others along in their journey towards financing sustainable business. And so that's our call to action. Please join us. Thank you all.
Many thanks, Alberto and Scott, for your opening remarks. We're going to have to bring some more speakers. So thank you so much. I think we've heard some great commitments here. $500 billion already committed. 1,000 companies by 2023. I think that gives you the sense of the ambition of this group and the potential, of course, as well. So how does this integration of the SDGs in corporate investments and finance actually look like in reality, in real life for CFOs in different industries and different regions? So this is really what this session is about, and that's what you're about to find out. We've invited a group of 6 leading CEOs and CFOs to share their insights. They're all part of the Global Compact Task Force. And this is my great pleasure to welcome on stage Hilary Maxson, EVP and Group CFO, Schneider Electric; Koushik Chatterjee, Group CFO, Tata Steel; Judith Hartmann, EVP and CFO, Engie; Dr. Amy Jadisimi, CEO, Ladol; Pedro Freitas, CFO, Braskem; and Kevin Berryman, President and CFO at Jacobs. And of course, the fantastic Maggie Lake, who will be moderating this panel today. Thank you, and over to you, Maggie.
Thanks so much, Marie, and welcome to all of our panelists. You know, I've had the distinct pleasure and opportunity to spend some time with some of you recently as part of the CFO Insight series, and I'm so excited that we have the chance today to share your insights and learnings with the broader audience. So thanks to all of you for being here. And Hilary, I'd like to begin the discussion with you. Help us understand how your company invests, including R&D, to reach the ambitious goals you've set. For example, growing your green revenues to 80% or increasing green material content in your products. How do you invest to get there?
Thanks, Maggie. Happy to be here. So starting with Schneider, Schneider's been a leader in sustainability since at least 2005, when we released our first Schneider Sustainability Index, or a really set of internal goals linked to the UN SDGs. And some of the examples you just used are part of our 2021 to 2025 Sustainability Index. And those commitments really play a big role at our company in our employee value proposition, all of our internal decision-making, including resource allocation, and we've organized our business to support our customers in their own journeys towards sustainability. They're more focused on the climate side. In terms of resource allocation, I'd think about it in a few big buckets. So for us, primarily R&D, supply chain, investments in our sustainability business, and investing in our people. And the Schneider Sustainability Index is really a great motivator in this, in that we decided on the metrics within that, including the ones you named, at the executive level. And then we look to build our strategy and our business plans in order to achieve both our financial goals and our sustainability goals together. And I think, as was mentioned earlier, these are actually fairly rarely misaligned. In R&D, a good example is where we're making different decisions on suppliers of plastics and metals to begin to shift to more recycled materials. Costs can be higher here than traditional goods. Super high level estimate may be something like 10 or 15%. But we put this into the overall business case. We look to work on offsetting innovations, plus this really differentiates our product with customers. So our overall product focus today is on digitization through native connectivity, resilience, and efficiency, all really key drivers of green revenues, as well as the customer sustainability journey. Another short example on supply chain, we have a goal to have CO2 emissions from our top 1,000 suppliers by 2025. Of course, we don't control them directly. We launched the Zero Carbon Project earlier this year to support them. 91% have already joined us in the ambition. This project also takes resources and spending from us, but we're able to use the same educational materials and technologies to support then our sustainability business with customers. And then investing in people, diversity, and generations, for me, just makes good sense as a company, particularly one driven by innovation. So that one I really don't even think of as an incremental cost to our business.
Yeah. And Hilary, I love that you're framing it around the idea of building value in the business strategy for the long term. for the success of the company. Judith, great to see you again. And, I know ENGIE also has ambitious targets on many sustainability topics as well. But as a utility, environmental objectives are key. You've recently announced a commitment to be net zero by 2045, but this transition is going to take considerable investment. How much will you need to invest to reach that goal, and how do you plan to finance it?
Yes, great to see you all and participate in this discussion. Indeed, for us, moving towards net zero is quite frankly a very important goal for us. It's important, I think, for all companies, but as an energy company, of course, to decarbonize is incredibly important. We have cut our CO2 emissions by 50% already in the last 5 years. We will cut them again by 50% by 2030, and then eventually be net zero in 2045. This is a big step for a company that used to have, not long ago, 5 years ago, almost 20% of our results were coming from coal, and a lot of our business development was coming from coal, about a third. But a lot of commitment from management to move us into this direction, and indeed we are, of course, putting not just the KPIs behind it, but also very significant investments. In fact, we will do a number of things over the next few years. The coal exit is one of the biggest drivers for us of CO2 reduction. A very significant investment into renewables. We will invest 6 to 7 billion of capex between 21 and 23 alone into renewables, and have a very solid pipeline to get us there. But we will also invest into the greening of gases, because we believe that it takes a complete set of answers for this planet and for the energy world to be able to succeed, to get to net zero, and while keeping it affordable also. And so greening of gases as well as energy efficiency will be incredibly important. We have 4 gigawatts of green hydrogen plans by 2030. This is the highest ambition of any of the European players, and biomethane is also an area that we're heavily invested in. France is targeting 10% of green biomethane in the gas sector, or in the energy usage through gas by 2030, and so we're a big contributor to this.
Judith, do you have plans to increase your issuance of sustainable finance instruments?
Yes, so clearly this has been a big lever for us in the past, and one that we're going to continue to leverage. We are today, depending on the day, number 1 or number 2 in green bonds globally, on corporate green bonds, and about 40% of our debt today is already done through green bonds. So quite frankly, very quickly, it will become 50% over the next few years. I think this is a really interesting topic, actually, because a few years ago, I was still hoping to see a differentiation financially on green bonds. And now it's obvious the green bonds have a higher oversubscription, and we are getting them at lower cost, which is great to see how much money is flowing into just the financing of green projects.
Yeah, it's going to be so important as we work through this transition. Koushik, I'd love to hear what this means for Tata Steel, because we know the sector is very capital intensive, and a shift to more climate-friendly production is going to require massive capex investments. How are you approaching this?
Yeah, thank you, Maggie. Wonderful to be part of this discussion. I think steel is clearly a hard-to-abate sector. So there is a significant amount of benefit if we can reduce the carbon intensity of the steel industry. The focus obviously is on the upstream carbon intensity, because that's where the large part of it is concentrated. over the last century, I would say the technology has been significantly stable, and therefore we are operating in a zone where we have to innovate much faster going forward as an industry. Steel is also a very fundamental metal for any economy, and therefore we have to promote circularity, reduce carbon, and ensure that we get into processes which are much lower from an intensity point of view. So I think this is the climate governance and climate strategies become the front and center of steel companies like Tata Steel. We also have been integrating a number of capitals, whether it's the manufactured capital, the social capital, and the financial capital, the human capital, into our reporting and disclosures, which is important to lend credibility from an investor point of view or stakeholder point of view. And in India, we've been one of the first companies to come out with the integrated report 5 years back, and we are only developing it. We've also been one of the top 5 steel companies in the Dow Jones Sustainability Indices from a metals and mining perspective. So it is important for us to plan this transition, because India is a developing country. It needs more steel for its growth and development, and yet it needs to balance its carbon emissions and move towards reducing the intensity of carbon. So we have, for example, a very strong internal carbon pricing for capital allocation. So every project goes through that filter, and projects which enhance our strategy of reducing carbon footprint certainly gets priority ahead of projects which don't. So that's one way of looking at it. I think the way we look at it, this is an important area where between the company, the customers, and the government, we will have to play our part to bring down the burden of carbon emissions in the planet. And I think we are certainly focused on developing a financial strategy which help finance it, but it's also important to ensure that the business and the industry remain sustainable, because that's the critical part of it. And I'm very happy to see that investors and asset owners are gradually looking at the alignment of long-termism in this area, because when we invest in a steel asset, it is for 25 years. So you cannot have a short-range view when you are allocating capital. And that's, I think, becoming the key, along with credible disclosures and reporting standards. And finally, I think as we move in, there will be some amount of residual level of carbon in the whole process, because we are looking at new clean technologies like gas-based direct reduced iron, eventually moving into green hydrogen. But even if there is residual, a transparent and a credible carbon offset market will certainly help, especially if it's aligned with high quality nature-based solutions. So it's a full gamut of the issues which will help us solve the problem, and there is no one magic bullet.
It's such a great point to bring up, Koushik, that shift to longer term thinking is going to be so critical as this market rapidly develops, and really a pragmatic approach to the transition that needs to take place. Amy, would love for you to weigh in here. What is your role, the role of your company in supporting broad access to sustainable energy in Nigeria and on the broader African continent?
Thank you, and thank you for including me on the panel. So we started on the sustainability journey before even 2015, because we were building from scratch. So for those of you who don't know, Ladol is an indigenous Nigerian company that has built an industrial-free zone out of a swamp over the last 20 years. Just under $500 million has been invested in the zone, creating an integrated logistics base. We have hotels, we have offices, and also a shipyard in the zone. So it's an industrial base. And when we contemplated setting it up, the Sustainable Development Goals, as they came to be, just made sense. And that's everything from meritocratic hiring to creating as much local employment as possible. and to be as sustainable as possible. From a climate change perspective, Ladol is also a port facility. So being a port facility, of course, we were thinking about the impact climate change would have on our infrastructure. We're high users of energy. So all of these factors were factors that we had to take into consideration because we were building something new and we wanted it to be the best it could possibly be from a perspective of profitability. And we know now that sustainable companies are more profitable companies, but also sustainability in the broader sense of its ability to impact the local environment and its ability to survive through all the different generations that are to come, where Ladol will remain relevant.
That I think that this is why building on the language around SDGs and continuing to fill out that framework is so important, because it is what you built that plan on. Pedro, your company has defined long-term goals around the circular economy and carbon neutrality. As a CFO, what's your role in ensuring that the company will succeed in really meeting those objectives? What kind of investments will be needed? And again, how are you going to raise the financing? I think this is what a lot of companies who are and leaders who are watching this want to know.
Hi, Maggie, and thank you for the question. It's a pleasure for me to be here showcasing what some of us at the CFO Task Force are doing to further the 4 principles that we have announced a while back. The first part of my role, I believe, was in supporting the definition of the impact thesis and the metrics. We have defined 7 measurable objectives for 2030. You mentioned 2 of them around circular economy, which relates to recycling of plastic waste, and then carbon neutrality, which I think everybody knows what it's about. But for us, it's about energy efficiency, it's about renewable energy, and also biopolymers. Braskem is the largest biopolymer producer in the world, and we are keen on increasing that as a business opportunity, which then links to a third of the 7 objectives, which is around financial and economic results. So we have this long-term objective of delivering ESG value creation and risk mitigation to society as a whole. And so after defining the impact thesis, what we're looking for, we then went on to, and I think it's another key part of the CFO role in changing the investment prioritization process within the company. We have expanded the role of carbon pricing in deciding investments. We have been using that for several years, but now it's more relevant in the weighing of investments. We have created a new bucket of investments for the decarbonization project, while always ensuring the basic premises of maintaining financial health and discipline in capital allocation. So when we talk about these 2 specific goals that you mentioned, you asked what kinds of investments would be needed. So for carbon neutrality, we have a goal of reducing 15% reduction on top of 17% we have already reduced in the past 10 years. Another 15% reduction in scope 1 and 2 greenhouse gas emissions, and then getting to zero carbon neutrality, so to speak, in 2050. I have already talked a little bit about investing in biopolymers, in renewable energy. We have now achieved roughly 1.5 million tons of CO2 emissions avoided through the use of long-term renewable energy purchase agreements. So we have the power purchase agreement with a third party, and that supplier will then invest in wind farms or solar farms. So it's a way for us to support that. We have been expanding our current assets in biopolymers. We are increasing our footprint by 30% until the end of next year. And we have just announced a new partnership, an MOU with SCG Chemicals in Thailand to perform feasibility studies to invest in a new green ethylene plant in Thailand. We have also expanded other products, other green products that we have, such as ETBE production. So we have been doing that consistently. And when we talk about the other goal around circular economy, we are investing again substantially to increase our sales, to multiply our sales of recycled product by 30 times in the next 5 years. So it's really a major, huge challenge that we have. We, for example, are investing in a new plant in Brazil in partnership with Valorem, a Brazilian company, to produce 14,000 tons of recycled content in the years. It is important to point out, and I think that some of the numbers I mentioned show that it's a very large challenge. It is an industry-wide matter, and I think we only capture that with global cooperation, including from the capital markets and financial institutions. So we are working with them to secure the funding necessary to put those projects in place.
Which is a great point. It always makes me think Scott Mather from PIMCO, the co-chair who we heard earlier, has said before SDG 17 may be the most important, right? We need these cooperation across industry,
yes.
and between private and public sector if we're going to sort of make the change happen. And that seems to be core to what you're saying and many others. I want to move to Kevin, if I may. And I'm sure the idea of sustainability being core to the business strategy is resonating with you, Kevin, because from major acquisitions to divestitures to rebranding, Jacobs has really been transforming itself over the past few years. What's been driving the change, and how does sustainability fit in?
Thanks, Maggie. Very pleased to be here today and participate on the panel. I think maybe to answer the question, set a little context of what Jacobs really is and what they're about. We're about a $15 billion revenue company with a talent force of around 55,000 people around the globe. And we're a professional services company. And we provide consulting, technical, scientific, engineering, design, digitization, consulting work, and project delivery across public and private clients around the globe. And as part of that, our solutions are focused in the areas of water and wastewater, clean energy, environmental remediation, transportation, cybersecurity, IT services, pharma and electronics, and even space travel. So you can see that it's part of our heritage and part of our business, and we think about around $5 billion or approaching $5 billion of our revenue is specifically about driving solutions to our clients in the areas of ESG related things or against the SDGs. And so it's part of our heritage. I think the transformation that you talked about really, though, is about our people. And because we're a professional services firm, we make our money because we get the best talent around the globe. And I think ultimately, as we were going through the transformation that you alluded to, it became very clear is that not only is it part of what we do on a day-to-day basis, but to be able to win that war for talent, we had to be even better as it relates to driving what I will call an ESG-related agenda into our business. And so if you think about the globe in which we're operating today, right, and our talent and the communities in which we work and our clients, it's becoming a business imperative. And so first kind of formal this when we introduced our plan down 2.1 against that, and fundamentally set some science-based targets and put our climate action plan in place for emissions reductions, and actually introduced our action plan for justice and equality during the period of unrest when we were in the middle of 2020 and the challenge of a year ago. And so we've made really good progress because we're a professional services firm. The way that we're going after this, we're reducing our real estate footprint, we're reducing our travel, we're introducing hybrid working capabilities, and we're engaging with our top suppliers. And at the end of the day, while some of this was driven by realities of COVID over the last 18 months, we're now institutionalizing these key learnings that we've had to make sure that our strategy is even more aligned going forward with the key learnings that we've had during the pandemic. So I think we're very, very uniquely positioned as a company to kind of double down on that effort and to ensure that we're gaining the best access to the talent and the diverse talent that's going to make us the company that is going to want to be hired by our clients to solve ESG related challenges and opportunities. And I think by us being able to embed that into all of our offerings, whichever client that we're doing work with across the globe is a way that we're going to be able to contribute in a material way to making the world a little bit better place.
Yeah, Kevin, I love the idea of looking at it through the lens of talent and also having a competitive edge when you're going to your customers. We've certainly heard that from the consumer angle as well. And Hilary, this to me, we've spoken before about future proofing your company, you know, like making sure that you are positioned to be able to thrive in the competitive environment, which is going to demand that you're adopting these. I want to circle back and dig in a little bit on the financing of the investments. Because I think that, again, this is how we're going to get it done. What's your strategy in terms of this? And are you going to look to some of the new innovative instruments that Scott touched on? You had a very successful launch of a $1.2 billion sustainable finance product already, a $650 million a sustainability-linked convertible bond issued. Are you going to be continuing to look in that direction as you try to support your climate and diversity initiatives?
Sure. So for us, a little bit different from GE or Tata, we're not a super CapEx heavy company. Effectively, we do lots and lots of little projects and innovation and then general company spending to support our strategy. And then, of course, the path to the UN SDGs. And as I spoke about prior, we've really sort of weaved sustainability into the fabric of the company strategy. So it's tough to pull out something that's very specifically oriented to a green bond, which is why these newer KPI linked instruments were really important to us. All the tracking and administration of a typical green bond doesn't really lend itself well in the business model. Whereas with the SSI that we have, the indexes that we already track and audit, we're already looking at our own key KPIs. So like you said, we took the opportunity last year of the release of a new sustainability index, as well as a capital markets day we had to issue a sustainability linked convertible bond. I think the first of its particular kind in the market, super well received by investors. Like Judith said, I think green financing, credible green financing is playing itself out to be beneficial for both investors and for the companies. So we definitely like to do more ESG KPI linked issuances in the future. Probably 2 points I would speak to help us there in the journey. First, and it's been said, but a standardization of simple and internationally aligned sustainability KPIs is quite important. At the moment, it's a lot of work for the company, the banks, investors getting comfortable with the metrics and the auditing of these metrics that are really custom across companies. And second, we want to include metrics at the moment from all of the categories of the UN SDGs, like we do in our SSI. So we're also looking forward to when the European Central Bank subscription program is extended beyond just climate-linked KPIs. Not really a necessity for us today, and they're definitely already working on it, but a great example of, like we've been talking about, where companies, investors, regulators, governments can all come together and I think even support further all of these financing opportunities for companies on the journey.
And it's going to be so necessary, Judith, as we do this, because when we're moving through the SDGs, it's not only the environmental objectives that we need to be conscious of. There are social challenges, such as managing the social impact of the energy transition, that are going to be required. What kind of investment are we looking at in terms of that?
Yes, indeed. At the end, it has to all come together and work on the one hand, of course, financially, which is important to us as CFOs, for the environment, which is, of course, why we're having this discussion and decarbonizing. But there's a social aspect that is incredibly important. And what we are seeing is that we will need a mix of technologies to ensure the affordability at the end of the day of energy through the course of time. So that's a very macro statement. From a company perspective, quite frankly, there's a lot of cultural shift that we are also driving on reskilling the employees towards renewables and new business models that did not exist in our company very much. And then, quite frankly, it goes down even to the site level. When you are, closing, for example, a coal site, we've had great examples where we have then reskilled people on site. We have done rehabilitation, of course, of many of these sites. And so really, you got to think about it on several levels, to make sure that at the end it all works, because if it doesn't, then we're not going to be able to move at speed.
Yeah, I would like to try to get final thoughts from the rest of our panelists too. So if we could try to keep the answers a little tight as we move through, there's a couple of really important issues to get to. And Koushik, we just heard Judith talking about, the macro view, reskilling. These are going to be issues that involve both the governments and the private sector together. I wonder if that's true as well for the global metal industry. I mean, what is the appetite among investors to invest in the transition? And is there a sense that it's going to require for your industry some form of public support?
Yeah, I think, Maggie, it's a very important point to address, because end of the day, this transition is important to a low carbon world, and this is critical for everyone. And this comes with an additional cost, and whether it is in the capex or in the opex, till certain technologies reach a scale, these will be costs that people have to bear. So it is between the company which has to bear a significant part of that. But there will be a viability gap funding required, which is essentially the government, because it is also the way in which you can abate the carbon, and the maximum trade-off will come to each country which are looking at carbon abatement. So I think, and the cost increases will reflect on the customer. So as I said, it's a shared burden to make this world a better place, and a shared approach to ensure that we can get to a better climate and a better planet in the future.
Amy, we heard Scott earlier talking about, with all of these challenges, there are opportunities. The size of what is the ESG investing landscape in the trillions. Do you have plans to leverage the growing interest of institutional investors in the SDGs in this space?
Thank you. So firstly, being in Africa and being in Nigeria, we simply don't have access to much international finance. Secondly, the international finance that's being targeted at Africa that's SDG linked is still not being done in a sensible way. So it's demanding net zero from day one. And that just is nonsensical. So what I would say on the upside, though, is for a company like Ladol that's been sustainable for the past 20 years, there is definitely a lot of interest from international lenders in figuring out what does make sense. So there's a recognition that the investment has to come into private companies that are sustainable in Africa. There's a recognition that none of the instruments currently available are really fit for purpose. And so we've got to devise something that works. And DFIs like IFC are working on this, ADB is working on it. So I think we're still in the planning phase before we get to the execution phase. In the meantime, though, the local investment that's coming into developments like Ladol is increasing substantially. And I think that's one thing that COVID did do, is emphasize the importance of local investment as in order to create local industrialization. And what Ladol wants to focus on, and what we focus on when we talk to investors, is that sustainable business models are more profitable. So if you're going to be a local lender, or you're going to lend internationally through local lenders, which is also a big thing, you would naturally gravitate towards more sustainable companies because of the wealth of information out there that tells you that those companies are going to be more profitable in the medium to long term.
which is so important. And Pedro, can you pick up on that? How are you and your investor relations team approaching investors? And is that a message that you feel that they now understand?
Yeah, I think more and more investors and companies realize that any transition path, in our case, to carbon neutral circular economy, requires global cooperation. So we see many players in our industry that are focused on long-term sustainable growth. Capital flows that will be required need to come from the market, right? And I believe that the companies need to provide long-term value creation, adequate disclosure, so that then investors can provide competitive funding and credit lines. So what our investor relations team is doing, and a lot of what we're doing, is to show that we are doing the right thing. We have done an ESG day. We have integrated reporting that is verified by a third party, which follows GRI and SASB standards. We always look at the ESG ratings of third parties, and then we do gap assessments to close those gaps over time. So I believe that having this partnership with the market and then being very transparent around what you're doing is the way to go.
Yeah, absolutely. And again, I think this is where the work of the task force is so important, creating that framework for that communication. Kevin, I'm going to have you close this out. And again, especially from the point of view of a professional services company, how will you ensure that you deliver tangible results and the SDG impact? Oh, I think Kevin's muted. Let's see if there he goes.
Sorry about that. Thank you. I think with our new Plan Beyond 2.0 strategy, we really have created specific objectives and focused against actually 6 SDGs of the 17. Even though we're supportive of all, we're really focusing on those where we can make the biggest difference. And we're talking about all of our solutions by 2025 will be able to drive an SDG improvement for the solutions that we're providing to our clients. That is a huge change from where we are today, where we're probably about a third. And that requires a significant investment in our people, whether it's new talent that it can help drive that agenda, whether it's a training, upskilling of our existing people, whether it's the creation of new sustainability leads, which we've created in our businesses. All of these are really important efforts, which needs to be focused and created by a greater foundation of system tools and digital capabilities, which will allow us to track it. So I think it really is important. And by the way, it's now being prioritized in a much greater degree, I would say ESG related matters, SDG goals related, where in terms of our capital deployment, specifically in M&A, those efforts which are providing greater capabilities for us kind of get up the priority list as it relates to how we will deploy our capital going forward.
Which is so important. Kevin, I'm going to jump in because we're out of time, but I think we had so much information here, so many learnings, and a focus on the innovations and the progress, which is so important. So thank you to all of our panelists for your insights today and the leadership that you're providing in your sectors and through the task force. Thank you so much. I'm going to hand it over now to Jerome Lavigne-Deville, Senior Advisor and Co-Head of the CFO Task Force for the SDGs, for closing remarks. Jerome?
Thank you, Maggie, and thank you to the rest of the panelists for a very inspiring session. Companies are facing unprecedented challenges and opportunities to meet the UN Sustainable Development Agenda, and it is time for CFOs of all global compact companies to join in and help their companies make the right investment, measure the impact, and get support from investors. It's also an opportunity to give the financial market a new sense of direction, to finance the most promising solutions and innovation, and to create a race to the top among companies. The leaders in this group have created a blueprint to integrate SDGs in corporate finance. Now we will partner with our local networks to recruit CFOs from all countries and industries to join our initiative and create a global movement. Thank you so much, everyone, for joining us.